So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha. Welcome back to The Daily Call. Today we're going to answer the question, what is the difference between speculating and hedging? So I often hear the terms speculating and hedging thrown about in forums and in emails. And people assume that both of these things are the same. And while they might perform potentially the same types of trades, the psychology of the investor going into a speculation trade versus a hedge trade could be completely different. So for me, speculating is the assumption that you're getting into a trade with huge potential risk-reward payoffs. And so this speculation is built up by the trade that you're getting into, in the sense that you're building an option strategy or a stock strategy or a combined option stock strategy with the purpose of generating positive expected returns. Now, you assume that this is going to happen, and that's the part of the speculating. You're speculating that this is going to happen, though you don't know for sure. But the assumption with a speculator is that they're generating money with their trades. So all of their trades are focused, or at least the trades that they're speculating on are focused towards generating a positive expected outcome, generating alpha or superior returns with their trades. If you take the other side of the coin, a hedge trade would be a trade that is looked to minimize the risk or reduce the risk of other trades in the portfolio. So the reason that we call hedge funds is because they have the ability to trade both sides of the markets versus, I say, a regular mutual fund, which only has the ability to basically buy. And so hedge funds were created basically so that there was an opportunity or an alternative where you could actually use a long position in the market, but then use a long put option contract to hedge that position in the market. Or you could short some sectors or industries of the market to hedge your long position in the market. So hedge trading to me could perform the same thing. You could actually be buying the same contracts as a speculator or hedger. But again, the underlying assumption is with someone who's hedging a position, they might understand that that hedge trade is solely for the purposes of protecting themselves in case the worst happens. And so for that reason, they might already assume going into the contract that they plan on losing that money. But they're okay losing that money because of the amount of risk reduction that they received during the contract time period. So to use an analogy with insurance, if you have a house that you own and you buy insurance in case it burns down, the premium that you pay to the insurance company, you're basically planning to lose. You are hoping that your house does not burn down to the ground. You don't ever want to make a claim that your house has burned down to the ground. So you'd be happy at the end of the year paying that premium to the insurance company in exchange for the reduction in risk should your house burn to the ground. And that's the same thing that hedgers do. Hedgers will pay a premium. That doesn't necessarily mean that they think or that they speculate that the market will go down or a stock will go down, but they're basically covering themselves by using a hedge technique, whether it's long put options, whether it's call options, a combination of options, but that's what they're doing. So again, speculators are really looking for these options to create potentially an asymmetric risk reward scenario with a low probability of success. Hedgers are taking the other side of it and are looking for a potential trade that could hedge and reduce some of the risk of another position. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.